Welcome to our in-depth analysis of a seismic shift in global trade, China's decision to halt exports to the United States and the European Union. This unprecedented move has sent shockwaves through international markets and disrupted supply chains worldwide. In this video, we will explore the causes behind China's decision, the immediate and long-term effects on global commerce, and the responses from affected countries and industries. Background on China's export. To understand the magnitude of this decision, we first need to grasp China's role in global trade. For decades, China has been the world's largest exporter, supplying a vast array of goods to markets worldwide, especially the US and the EU. From consumer electronics and machinery to textiles and furniture, China's exports are integral to global supply chains. This dominance is rooted in its vast manufacturing capabilities, competitive pricing, and extensive infrastructure. Reasons behind the export halt. Why did China decide to halt exports to its largest markets? There are multiple factors at play. Firstly, geopolitical tensions have escalated significantly, with trade wars, tariffs, and political disagreements straining relations. Secondly, internal economic challenges, including a shift towards domestic consumption and innovation, have prompted China to reconsider its reliance on export-driven growth. Lastly, global supply chain disruptions and the need for economic resilience have also influenced this decision. Immediate economic impact. The immediate impact of China's export halt has been profound. Industries reliant on Chinese goods are facing significant shortages and increased costs. The disruption is particularly severe in sectors such as electronics, automotive, and textiles, where China holds a substantial market share. This has led to production delays, higher prices for consumers, and a scramble for alternative suppliers. Supply chain disruptions. Global supply chains are intricate networks involving multiple countries and processes. China's export halt has exposed the vulnerabilities of these networks. Companies are now facing the challenge of reconfiguring their supply chains, a process that is neither quick nor easy. The logistics industry is particularly hit, with delays and rerouting causing chaos in shipping schedules and inventory management. Impact on the U.S. economy. In the United States, the repercussions are being felt across various sectors. Retailers are struggling to stock shelves, manufacturers are experiencing production slowdowns, and consumers are encountering higher prices and fewer choices. The technology sector, heavily dependent on Chinese components, is among the hardest hit, with potential delays in product launches and innovations. Impact on the EU economy. The European Union is facing similar challenges. Key industries, including automotive, fashion, and electronics, are grappling with supply shortages and increased production costs. The EU's efforts to transition to green technologies are also hindered, as many components required for renewable energy infrastructure come from China. Global market reactions. Global markets have reacted with volatility. Stock prices of companies heavily reliant on Chinese imports have plummeted, while those positioned to fill the supply gap have surged. Commodities markets are also in flux, with prices of raw materials affected by the disruption in manufacturing and trade flows. Search for alternative suppliers. In response to the export halt, countries and companies are urgently seeking alternative suppliers. This shift is driving a rebalancing of global trade dynamics. Regions like Southeast Asia, India, and Latin America are emerging as potential alternatives, though ramping up production and establishing reliable supply chains will take time and investment. Long-term economic shifts. Long-term, the halt in Chinese exports could accelerate trends towards diversification of supply chains and regionalization of production. Companies are likely to invest more in automation and local manufacturing to reduce dependence on single sources. This shift could lead to increased costs in the short term but potentially greater resilience and stability in the future. Policy responses. Governments are responding with a mix of policies aimed at mitigating the impact and bolstering economic resilience. Trade policies are being reassessed, with a focus on reducing dependency on China. Incentives for local manufacturing, investments in technology, and strategic alliances with other trading partners are being explored. Conclusion and future. China's decision to halt exports to the US and EU marks a pivotal moment in global trade. While the immediate impacts are challenging, this disruption also presents opportunities for innovation, diversification, and strengthening economic resilience. As the world navigates this new reality, the future of global commerce will be shaped by the responses and adaptations of nations, industries, and consumers. Thank you for joining us in this exploration. Don't forget to like, share, and subscribe for more insightful analyses on global economic trends.